So what's new in LTCi? Probably the hottest topic today that we hear about is what happened in Washington last year. As many of you know, there was a state mandated payroll tax to pay for a public long-term care program. And what that ended up doing is it ended up motivating a lot of people to have the conversation of all ages, right? We had people in their 20s and 30s coming to us saying, well, I don't want to necessarily pay this tax for the rest of my working career. What do the private solutions look like? Because there was an opt-out by buying private insurance. Washington's still motoring along. They're going to start collecting this payroll tax, according to the state, by mid next year. But there are about 13 other states that are also looking at this. And just to give you an idea of the impact that just one state had in the marketplace, recently Broker World magazine came out with a survey of all the long-term care carriers and how much they did in sales last year. And believe it or not, the sales for the standalone market tripled in 1 year because of one state promoting long-term care because of the payroll tax. California has a working committee that's going to make a recommendation to the governor by the end of this year about their own potential payroll tax. New York has a draft legislation about a payroll tax in their Senate right now. Probably won't happen this year, but in the next couple of years, it's very likely that one or many of these other states is going to do the same thing. So it's important to understand what's going on. Your clients are going to ask you about this because they're going to start hearing about it even from their employers. And again, we can be a resource for you, whether you're offering long-term care yourself or whether you want to partner or want to work with a specialist. We're here to support any way you want to proceed there. So that's probably the biggest update that's just going on in the marketplace as a whole, and it's moving the markets, and the carriers are now taking it more seriously, which is actually a good thing because the carriers are starting to think about how to develop new products because they see the demand. And really what we face is a more difficult, more complex product lineup. There's a lot of different types of solutions that necessitate having a specialist. The carriers are still trying to figure out how to support it, and it's challenging. I won't sugarcoat it. It is challenging to be a long-term care specialist and to keep up on all of these moving parts and all the different carriers' processes. In terms of the product trends, we are seeing the standalone market kind of consolidate, but also stabilize. The carriers had some repricings on their new products a year or two ago, but since then they've kind of stuck with their current pricing. And I think the rise in interest rates recently has actually helped support that market. And it's also led some of the asset-based products to start reducing their premiums. So we saw from 3 carriers in the last couple of months that they actually announced price reductions, probably in the 5 to 10% range, but still pretty significant. So we are seeing good activity, stabilized prices, as well as even reducing of new business pricing. We're also seeing new products. Go ahead, Wendy, if you have a question.
Oh, no, and I just wanted to add to that because a lot of the carriers today, and certainly with the expansion of the cash indemnity, and maybe you can talk just a second about that because I get that question a lot. With the insurance companies doing that, they haven't placed restrictions, what used to be a decade ago, on who provides that care. And I think that is incredibly important in how that works, because it is less financial stress on the caregiver. It's allowed family members to actually provide the care for their loved ones. And then they feel much better about taking the money from an insurance company as opposed to taking it from their family. So Mark, could you just add to that a little bit about that?
Yeah, great question. It used to be many years ago, they had some indemnity products and they went off the marketplace. And then now we're seeing them coming back to the marketplace, primarily in the asset-based, the long-term care extension rider products. There are several carriers now that have the cash indemnity benefits. And this is a response to clients' really needs and wanting them to have more flexibility at point of claim with how they use the money from the insurance company. So it's great to have those options again available. Clients that had parents that had long-term care policies that were reimbursement, that didn't like the claims filing process, for example, have options where they, again, are getting cash when they qualify. So again, a lot more flexibility, and those products are very competitive. So they're becoming the leading products in the market. So that's a great point, Wendy.
Great, thanks.
And I think the overall trend is more options, right? Which is, I think, a great thing. It's hard to navigate for us as professionals, but it's great for consumers to have those options as long as they understand the pros and the cons of the different options themselves. A new product. So the other thing that's exciting is because of not only the payroll taxes, but also because the carriers see the demand for long-term care growing, we're seeing a lot of new products. It's been happening for several years now in the life insurance space, where you're seeing either chronic illness or long-term care riders becoming much more prevalent. I would say almost every major life insurance company in the country, definitely the top 100, all have some type of acceleration rider on their life insurance product. So we're going to talk a little bit about where those fit in the long-term care planning process, because they serve a much needed community there, and they're growing in sales just because of the sheer volume of the types of carriers and products out there. In terms of standalone products, we're seeing it consolidate to about 6 to 10 carriers, and that's a big portion of the LTC market. As we mentioned, it tripled last year, so we continue to see that growth. It won't be obviously as high because without Washington, but it will start growing, we think, off of where it was before. And we're seeing about 6 to 10 life insurance products with what are called extension riders. And the way to think about those products is you're not only accelerating the death benefit, and it's almost just a return of premium. So it's just paying you back what you put into it as a death benefit, okay? But it's almost like adding a standalone product to the end of your life insurance product, okay? So it's a different structure that's more comfortable for the carriers to offer. It offers very competitive value for consumers, and we'll look at a couple of case studies today as to why that marketplace is becoming much more popular. Typically, that product line has been more reserved for clients that have more income and assets, right? Because they tend to be more prepayment solutions. We'll talk about what that means, but single premiums, 10-year premiums, which means you have to have more cash flow to be able to afford that. A new product came out just a couple of months ago from a major carrier that offers another pay to 95 option, so almost like a lifetime pay option with guaranteed premiums, but it helps to create more affordability. So we're really excited about being able to offer more of those asset-based products to the masses with more recurring premium types of solutions. So we're just seeing more innovation happening in terms of new products. Also on the alternative product side, we'll talk a little about this. Traditional and these extension rider products dominate what we'll call the market for long-term care specific planning, right? The life insurance product with the acceleration is still popular, but it's more oriented towards life insurance planning. Well, what happens when my client is not in good health, right? We run into this all the time. The client maybe waited a little bit too long, or maybe they just had a surgery, right? Or they just had some event that's kind of keeping them from doing their insurance planning. Well, we also have now a variety of alternative products, which are very competitive compared to even our traditional options. So we'll talk about all of these different options, and it's really a portfolio approach. So again, it does help to be a specialist in the market, because you can keep up on all these different types of products, but we do also have resources that we can provide to you that shares with you what's going on and where the leading products are.